Hello and welcome to another MCO market update on HBAR. We are currently here on the daily time frame for HBAR and we see that the market is still holding within our wedge pattern. So we've just literally rallied into resistance. The smaller time frame pattern, I believe, therefore, is a little bit distorted because ideally the price would have pushed a little bit higher by now on the smaller time frame to fulfill a third wave internally. And we'll talk about that in a minute. But I just wanted to show you this pattern here first, this wedge pattern, to show and explain why the price is likely stopping there where it is stopping at the moment. And that's likely because of this trend line. Yeah, the upper trend line, the upper boundary line of this wedge pattern, of this price channel. And that just slows the local uptrend down, the local uptrend that started here around the 7th of April. So I cannot fully confirm yet that we are moving up in the fifth wave. I cannot fully confirm yet that we've bottomed there in the fourth wave on the 7th of April. It is just a little bit too early to do that. However, I am tracking higher prices as long as the support levels that I'm sharing on the smaller time frame are holding, okay? So let's talk about that. But before we do that, there are basically two pathways that I am tracking. One of them is the white scenario, which is a more extended wave 4 correction. In this scenario, the correction from the December high is a 3-wave move in wave A. We're now moving up in a B wave and would then come down in a wave C before we go higher. So it's simply a delay in the uptrend. A scenario that's perfectly plausible as long as the market is holding above the 9.8 cent level, the 61.8 retracement. This is not a must that we do this. The price absolutely doesn't have to form this extended wave 4. It's not needed. Okay. Now let's also remove that and let's talk about the smaller time frame. Because on the smaller time frame, I'm tracking the direct move up also in more detail. So I shared already with you the larger white wave 4 here, and the blue scenario suggests that this wave 4 already bottomed. Now, it's, however, a very messy and distorted structure here. And as you can see, we kind of stopped there around the previous highs, here around 20 cents. That's also where the trend line is coming down on the larger time frame. But what you can see actually is that the market found resistance just where these previous swing highs are located. I'll highlight that line in green. So this line acts as resistance. Normally, what we like to see is that a third wave, as shown here in blue, normally would get to the 21.3 cent level in this case, but the 138% in general, 138% extension, well, we haven't arrived there yet. I'm not entirely sure if we get there. It would be still valid, even with a weak third wave. But yeah, I mean, it's just a weak scenario in this case, a very weak leading diagonal if the third wave doesn't even push to 21.3 cents. But as I said, we need to be realistic. We have resistance, previous structural resistance. We have a trend line on the larger time frame. So there are reasons why the market kind of stopped there. I just want to share with you that, honestly, one more high in this blue third wave would be ideal. It's not absolutely needed, however. So these are also the next resistances then, right? 20.4 cents, 21.3 cents. And there could be a wave 4, might be unfolding right now. If it goes down lower, I see this as a wave 4. And then one more high is needed to form 5 waves up. Now, if a deeper pullback unfolds now, too deep for a fourth wave, then we might consider the pullback is a wave B. That's just part of the white scenario then, in which we form this more extended correction that I showed you. It's all just corrective at the moment. I think best is next to watch for the blue scenario potentially to unfold and to pay close attention to this so-called neckline of this inverse head and shoulders pattern, left shoulder, head, right shoulder, before we potentially go higher. So yeah, I mean, the blue count is kind of preferred. I don't really have very, very clear scenarios here, but both of these are being tracked, white and blue, and in both of them, I'm watching for higher prices. What I will share with you is a standard Fibonacci support area, which we can use because any break below it would be more bearish than it should really be in these scenarios, especially a break below 13.8 cents would be too deep to even consider any pullback a wave B. That's the update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.